Hello, everyone. This is Shemaine Melton. This is Curve Fit Live, and I am your host today. And today we have Myranda Harper with Harper Business Solutions Incorporated.
Hi.
Hello. So, where would you like to begin?
Want to learn a little bit about HBS?
Let's do it.
Let's
do it.
HBS, as short for Harper Business Solutions. I've been doing this now we're coming into year 5, full-time entrepreneurship. It started part-time and then birthed into a full-time venture after I got laid off.
Cool.
Shout out to the people who laid me off.
That's right.
You helped me. You did the push that I needed. I had a whole plan.
Mm-hmm.
When I turn this age, I will go into full-time entrepreneurship. I learned very quickly, my plans and God's plans are two different things. Is that better? Can you hear me now?
There we go.
I want to make sure you guys can hear me. So, I learned very quickly, my plans, God plans, two different things. And so I kind of got pushed. And it came all because I want people to be educated. It wasn't about, I'm going to get into this and make a whole lot of money. If the money comes, that's just an additive. That's a blessing to it all. But the primary goal was to make sure that people are educated, that people will then take that knowledge that they've gained from me to serve as a catalyst to be able to educate the next person. So when I see people get that aha moment of, I got what you're saying. Ooh, I know what I need to do. I've done my job. So we focus on 4 areas. Accounting, which is also encompasses the bookkeeping services of things. There's also the business consultations and services, consultation and advisory services, as well as the tax preparation and planning, which for some people think only happen in the beginning of the year. That happens for individuals in the beginning of the year, but taxes are every day, all the time. You go to the grocery store, you're going to pay taxes on that gum you just bought. And the last portion is community engagement, where I work with schools, things like this. So that are the 4 areas of HBS.
That's awesome. So as far as your training, where did you receive your training?
So I am a graduate of the University of North Carolina, Chapel Hill, Go Hills. Yeah. And that's where I did my undergrad. After undergrad, I then pursued a master's in management, concentration in human resource management. Also pursued a master's in accounting with a concentration in accounting information systems. Went on to then do different courses that I have to take for continuing education every year. I'm also a certified nonprofit accounting professional, so I pursued that certification. And I am currently pursuing my enrolled agent certification. So, God willing, in the next year or less, I will be done with that. So it's been a lot of studying from formal education, as well as I have to take classes through IRS. I have to take classes outside. It's continuous knowledge on my own, and also that's required of me.
Gotcha. Okay. So what or who would benefit the most from your services?
So I work with small businesses as well as individuals, and working with them from 2 sectors. There's the personal side, where people come to me and they need help with their personal taxes. They're trying to figure out how to save money, especially with the new tax laws that just came this past year. They're trying to figure out what they can write off, what they can't write off anymore. So that's the individual and personal side of it. Mm-hmm. But there's also the side of the individual and personal that flows into business. So you have individuals who are wanting to start a business. They're just starting out. They're not exactly sure how. So I kind of sit down with them. Let's map it out. Let's talk. Mm-hmm. Let's share your ideas. Let's see where to start. Let's give you a kind of a roadmap, laying the foundation. And then from there, we build upon what they're trying to do. Also work with small businesses who are already up and running. So they're up and running. They've been going for a while. They finally realize, Myranda, I need some help. It's getting real. I was doing business, but I'm not sure exactly what we needed to do. I got to get my tax stuff together. I need my books together. And from that point in time, I said, okay, let's sit down, let's do a consult, let's find out what the need is and work from there. Because I never come in and say, this is what you need to do.
Mm-hmm.
I want to find out what your needs are and then go from there. Because a lot of people will come to me and they'll say, hey, I need A, B, and C.
Mm-hmm.
But the reality is they need 1, 2, and 3. They haven't hit A, B, and C yet. They need the basic foundational tools to be able to get to that point. So it's really defining what it is. I've worked with nonprofits, churches.
Very complex.
Yeah, it's an array. I have all different types of clients. I have clients who are tech. I have clients who are sales reps. I have clients who are starting out business. I have doulas. So yeah, it's all different types. Nobody, I tell people an accountant is not an expense. Remember that. An accountant is not an expense.
Wow.
We are an investment.
Let's write that down.
Yeah, we are an investment because you're going to either spend the money on the front or you're going to spend more money on the back end because you're going to need the cleanup. You're going to need the tax savings. And when I say tax savings, they're probably knocking at your door or they're coming for you and you need some type of help. So an accountant is not an expense. We are an investment for you to be able to get the things you need to build your business or to build your household, because at the end of the day, your household is a business also.
That's right. Well, that actually leads me to my next question. How can small businesses plan and prepare for the taxes?
So the first thing I would say with small businesses preparing for taxes is making sure you have your financials together. My number one rule when I deal with anybody in business, I say no commingling.
Mm-hmm.
That means your personal is separate from your business. You do not have one bank account for your business and your personal, and it's all going in there. It's my money and I want it now. Yeah, no, that's not true.
Discipline.
Yeah, exactly. You separate those two. So once you know the financial health of your business and you know the financial health of your personal, you can plan accordingly. The biggest thing is making sure you have some type of financial statements. And that includes maybe obtaining some type of financial software such as QuickBooks, Wave accounting apps. There's Xero. There's all types of different tools that people can track. I even have people say, well, I don't want to use a software tool right now. That's fine. Excel works wonders. Spreadsheets, putting it together so you have all of your income, all of your expenses, and everything else that's happened throughout the year. Then it also includes for people who drive, that do contract work or they drive for their business to and from, tracking your mileage, keeping track of that. There's different apps that are out for that as well. There's Mile IQ. There's also QuickBooks has one as well. There's all different types of things, but some people even do it by hand with their odometer, and that's fine. No, I'm serious. I have a client that she does it that way, and it's fine. It works, but guess what?
What's that?
Her books are accurate every single year.
Well, there's no cheating.
It works. So it's making sure you have tracking mechanisms to keep track of your income, to keep track of your expenses, and to make sure that you are able to give that to your accountant when it's time for tax time, and it's clear and concise. And one of the other things is, like I said, going back to, it's not an expense, it's an investment, is meeting with a tax or accounting professional throughout the year. It's not waiting until January 31st of 2000 and whatever the new year is to prepare for your taxes. Start meeting with that person beforehand so you can start gathering your tax information. You can start looking at your income. You can start analyzing what's going on. So if you need to make adjustments throughout the year, it gives you that time to do so.
So one other question that I had. So if you have, say you are the owner of your business and you are very involved with it, do you suggest having someone come in and kind of audit your business just to make sure often, personally?
It really depends. Now, I wouldn't say audit is a strong word. So let's definitely define that. People hear auditing like, oh my God, no.
Not the bad audit, but just to kind of track.
Just kind of have a review. And that's definitely the purpose of having an accountant or having a tax professional, having someone who has a specialty in that to come in and look at your financials to kind of say, okay, I see you've made $10,000 thus far in this year. You've got $11,000 in expenses. Okay, you're in a net income, net loss for right now. So let's see if we can make you more money. But having a net loss at the end of the year is not necessarily a bad thing. People think, oh my God, I didn't make any money. But okay, what does that say for your taxes? What does that have to do for the tax year? So it's definitely sitting with somebody throughout the year. Take, for example, I use me. I am the business owner. Mm-hmm. And I have to manage my own books in addition to everybody else's stuff. It's a lot of work. It's a lot of work, you know. By the time I finish going through everybody else's stuff, sometimes I don't want to touch my own stuff. I'm like, oh my God, I don't want to. Why? But I have to. And I have people who are a part of my network who are also accountants and tax professionals. And I will say, hey, I need you to look at this. Tell me what you see. Or I run those ideas by them so that way they can give me the feedback so I can stay on top of things that I may not have thought about or things that have slipped through the cracks. Because I will give you a prime example. It was 2 or 3 years ago, tax season. I was doing so much of the operational side of business. I didn't look at my own books. And when it came time for tax time, I got hit. And I mean, I got hit. So much so, I was in the floor gasping, holding my chest going, I cannot pay the IRS this amount of money.
Who knew?
And I learned a lesson after that.
What was that?
Stay on top of your stuff. Even though you're an accountant, you need to stay on top of your own books. You need to bring in other people who do what you do to keep you on track. Because guess what?
What's that?
An accountant is an investment, not an expense. And I...
Good advice, remember?
I ended up being an expense to my own self. I was like, oh my gosh, no. How did I let this happen? But one of the things that I did going into the new year was I hired an accounting intern. Oh, wow. And what I did was I hired her to be able to start managing my books.
That's right.
And doing the little things that I needed so I could come in and do quarterly reviews of my financials. And stay on top of where I needed to be for tax season. Such a blessing.
All right. So what is the best way to start up or file your taxes?
So when you're first starting out, and it really all depends on the type of business that you are. Now, when I say type of business, I mean entity structure. Are you sole proprietor? Are you an LLC? Are you a C corporation? Are you an S corporation? Are you a nonprofit? Are you an LLC being taxed in different ways? There's all those different things that come in. But, excuse me, one of the biggest things in preparing for your taxes is first starting with your entity type. If you are a sole proprietor or an LLC, your taxes are a part of your personal tax return. I do not know how many times I have heard, I have to do my business taxes. And you're an LLC. And I go, your taxes are a part of your personal tax returns. It goes on what's called a Schedule C. It ends up being, it's called profit and loss for business, a Schedule C. And it's what's the income, what's the expenses, and everything else that ties in that flows to your personal tax return. So for the LLC and for the sole proprietor, that's a part of your personal tax return. But the preparation from it is not like it would be for your personal return where you work a job and they give you your W-2.
Correct.
No, you have to be preparing and doing all the things I just mentioned throughout the year so you have that final number to do your taxes. If you're a partnership, there's partnership returns. Those deadlines are different and they're March 15th of each year. If you're corporations, those are also done April 15th, but it's also done on a different tax return schedule as well. It's 1120 and 1120S for partnerships and S Corp. So there are very different tax returns that have to be done, entity specific. Non-profits, there's 990s that have to be done for those. So it's really what's your entity that determines what type of tax return you're going to have to file and prepare.
Oh, wow. Okay. It's great information. So as far as, say you want to start paying yourself.
Okay.
How much do you think that should be? Is there a percentage wise or what is your suggestion as far as that?
So a lot of people ask that question. You know, I want to pay myself to get into business. Of course, you want to get into business, you want to make money. You want to see your money. Exactly. Money. You want to see your money. So at the end of the day, it's starting with, once again, going back to the entity type and your entity requirements. Sole proprietors and LLCs, your money is tied to yourself. They call it on a disregarded entity. So there's no true separate definition, so to speak, as far as a payroll. So what happens is it's an owner's draw. So you're taking that money out. You still have to notate it on the books, though. You're not just taking money and you say, hey, I took this money. You still have to notate it on your books. But you're drawing that money out. If you're a S Corp or corporation, you're on payroll, they have what they call a reasonable salary. The IRS says you must take a reasonable salary. Okay, well, I'm just starting out. I'm new in business. What's a reasonable salary? Well, a reasonable salary at that point is going to be comparable. I tell people you have to be mindful of the business. If the business isn't making hundreds of thousands of dollars, you're not going to be able to pay yourself a salary of $30,000, $40,000 a year. It's not there. It's not going to be able to happen. So one of the things that I work with those that are S Corp, C Corps that are running types of payroll in that manner is looking at your overall financials and the gross income and then paying yourself a percentage from there, because you have to look at your overhead expenses first. Can you make sure that the business can still operate? Can you pay the rent if you've got an office? Making sure that cell phone bill and business phones and things are paid. And then pulling from there. So I would say it has to be comparable to the amount of income that you're making. And then doing it from there, building. You're first starting off, you need to pull the money out. Okay, you're pulling out. But then from there, it's making sure that you are paying yourself a reasonable salary within relation to the income that you're making.
Okay. Yeah, this is actually the next question, something that I wondered as well. So how do you determine like a budget for hiring a potential employee, and at what time would you suggest that?
So hiring is a very, it's very hard process. The first thing is knowing when is the right time for your business to hire. Because one, you got to make sure you have the income to be able to pay somebody else. That's number one. Number two, do you have the work to be able to have somebody come in? Because once you start hiring people, you're now responsible for somebody else's livelihood.
That's right.
So you have to be able to make sure that you can support that individual and that individual's needs as well as your business needs. So the first thing I would say in budgeting is not set your sights first on the budget, but first set your sights on what the need is for the position. Define it very clearly, write it out, and then from there say, okay, how much money do I have that can be attributed to this role? And then from there, rolling that into, because you're already going to have an operating budget, at least so I hope, how much money is being put to, like I said, your overhead expenses, your monthly expenses to run your business, internet, if you're doing any type of creation of product, everything that goes into that, that's your overhead. And then from there, looking at your expenses. And then from looking at your expenses, can you tie in having an employee and still the business is profitable?
Makes sense. So another question that I've got.
Sure.
Is there a difference between personal taxes, business taxes, and the credit that is involved between the two? So what I'm saying is credit for your personal life and credit for your business. Is there a difference, or is it one and the same?
So there are several different tax returns. So you've got your personal taxes, which is on your 1040.
Okay.
And if you're an LLC or sole proprietor, then the Schedule C becomes a part of the 1040.
Okay.
Then if you are a S Corp, you have an 1120S. It's a separate return. Doesn't have anything to do with your personal taxes at all. At all. Unless you're going to be issued what's called a K1, meaning money that's been made throughout the S Corp as a shareholder, and then you have to report that on your personal taxes as income that's made. Same goes for if it's a corporation or a partnership, it goes on. You have corporations 1120, partnerships 1120S. Anything within the S Corps, within the corporations or the partnerships returns are separate returns that produce documents that flow into your personal. Sometimes, if there are K-1 issues, if there are dividends that are issued, then that information flows into your personal tax return. Other than that, once you're a corporation, the corporation has its own separate tax return than the 1040. Separate deadlines and everything.
Okay. So do you have any particular tips for businesses that end up owing taxes? What would
Yes.
you
know, it's, you try not to owe taxes, of course. You know, one of the things I tell people about tax season is it is not free money season. It is reconciliation season.
Okay.
So H&R Block had people messed up a few years ago about, you know, it's free money season, and the money was raining out of the skies and everything on that commercial. And I had so many people coming to me saying, I want X amount of dollars back on my return. And I was like, ooh, yeah, no, they got y'all messed up this year. It's a reconciliation period. That's what it is. One of the things that I can tell for small businesses is one, staying on top of the financials. There's also an ability to pay quarterly taxes. So quarterly taxes can be paid throughout the year. I call it almost like creating a tax credit account, so to speak. So you're paying these quarterly taxes to the IRS throughout the year. And let's just say throughout the quarter, you've paid each quarter, and you've got $5,000 sitting with the IRS that you've paid throughout the year in already money for your taxes. So what happens is you go through your tax return, and the IRS says, you get to one section and it'll say, have you paid any estimated taxes throughout the year? Well, let's say you have a tax liability of $8,000 that you owe the IRS. Well, you already paid them $5,000 throughout the year. That's now applied to your tax return, and now you owe them $3,000. But let's switch it up. Let's say it was the case where, you know, you ended up in a situation where you owe the IRS $4,000. You already paid them $5,000. You have $1,000 that's now due back to you.
Okay. Makes sense. All right. So we heard this a lot throughout the conversation, but there's the LLC, and then there's partnership. What is major difference? Because you're going to hear that often. And what is the big difference?
So a lot of people say, I want to start an LLC, or I want to remain a sole proprietor. And there's nothing wrong with wanting to remain a sole proprietor. The biggest aspect between the two is when it comes down to asset protection. Liability, asset protection. And when I say that, I mean, if someone tries to sue you, God forbid, somebody tries to sue you, the sole proprietorship, at that point in time, your personal assets are exposed to be seized, taken, if somebody sues you, as any type of compensation for judgment that you may have to pay them. With the limited liability, it gives you asset protection for just the business, not your personal assets. So it's when it comes to the different types of entities that you can choose from, especially with the LLC and the sole proprietorship specifically that we were talking about, is the asset protection. Each one is the asset protection that if you ever ended up being in a position of being sued.
Gotcha.
In addition to the fact of tax ramifications as well. Each one of them has their different things that we talked about as far as LLC, sole proprietorship flows to your personal taxes. Corporation, separate tax returns, unless you're issuing dividends or something that may flow through K-1 to your personal taxes. But it's going to be the asset protection when it comes to that question that you just asked, and the biggest difference of that.
All right. So, what is self-employed Schedule C tax?
So self-employment tax, that has to deal with, I work for myself, I'm a sole proprietor, or I'm an LLC, because that goes back to that Schedule C. The IRS gives you what's called, well, not gives you, they tax you self-employment tax. So it's almost as the rate of, they say you're subjected to the rate of taxes because you are employed by yourself, as what it would be of like Medicare, Medicaid if you were paying a job. So that's your self-employment tax. You have to pay it. Some people try to get out of it. But I will say this, taxes are a big mathematical computation. So there's some times where people are subjected to that self-employment tax and they don't even notice it because everything else that they have going on their personal taxes ends up being a wash. So it really all depends. It's a big mathematical equation.
All right. So, all right. So I think that sums up pretty much a lot of our questions. Is there anything that you wanted to tell our audience as far as your business that you would want to promote?
You know, I definitely will. When I started talking about building this business and not making money, I put the tagline and the thing that I wanted to be known with Harper Business Solutions was reaching beyond numbers.
Mm-hmm.
Everyone gets so fixated on the dollar. I want to make money, I gotta make money, I gotta make money. But it's not the dollar, it's the processes. What processes do you have in place to sustain the business going forward? So it's reaching beyond those numbers, reaching past the dollar, putting the processes and things to place to be able to then make the money. If you got the processes in place, you got the systems in place, the money's gonna come.
Gotcha.
You got the relationships and the things in place, the money is gonna come. And that's reaching beyond the numbers.
Wow, it's beautiful. So, is there any questions from the Facebook Live or any other questions that maybe you could think about or say as far as what we went over today? Anything else?
You know, I would definitely say this. One of the things that a lot of people got hit with this past year were people who are individuals who work different jobs, who have things. For example, I have a client, they work TSA. So they have to have certain types of uniforms, boots, things like that. So with that, usually they can write that off on their taxes. With the tax changes, not able to write off unreimbursable employee expenses. That's what they're called. Under certain circumstances now. So teachers still get their allotment that they can write off. Armed services will still be able to write those things off. But the average person, you know what I mean, we work in a job, we're required to have steel toe boots, you know, we're required to have our uniforms clean. Our jobs don't cover that. Can't write off anymore.
Understand. All right. Well, that just about wraps things up. Once again, this is Myranda Harper. She is with Harper Business Solutions Incorporated.
Yes.
And once again, my name is Shemaine Melton, and this has been CurveFit Live.
Thank you for having me.
All right. Thank you for being a part of our show.
No problem.